Yo, what's good, boys? Hope you're all good. Hope you're all well. Um, yeah, I just wanted to come make this video as a mini, not really like a FX replay session, but I was just back test. I did like maybe two this session. I literally just got on. No, free. Was it free? Yeah, it was free because I took one L, and that was because news stopped me out. But I was just testing the concept, see if I could hit TP before news. Obviously, don't trade news; it's stupid. Don't don't even do it. So technically, two serious. One trade was in a bit of consolidation, didn't hit stop. Came back to my TP1. I took partials, went break even, and then got stopped to break even, which was probably the smartest thing to do. And then this one was a perfect trade, and I don't know, I just wanted to come show you the precision of this. I don't even know what to call it. This SMC model that I'm working with. Um, but yeah, so we're going to jump onto the charts now. So this was the trade I just took. And as you can see in the bottom, obviously I did take it. Let me just move this quick. I did obviously take that. Check the numbers if you really want. Not really that fast. But yeah, I just wanted to comment. I feel like this is like a perfect example of this trade because it's not going to be you enter and it goes straight to TP. As you can see, price went up, almost hit TP1, which means we would have got break even, came back down, trades back into the original fair value gap, which is this perfect stop loss placement because I had it below this fair value gap looking at it now. But yeah, just perfect stop loss placement really. Because normally I have like a five pip stop targeting 10 pips. And yeah, but yeah, so we're going to jump on to the higher time frame. As you can see, daily time frame. We are bullish. We're currently in a bullish range, and I did this on purpose. I skipped to so you can on FxReplay you can obviously put it to the session time, so it puts you straight at London. Or if you do an hour before, you can see you can only see the 7 o'clock candle instead of the 8 o'clock, because that's like a main issue that I have with. It's not really an issue, but it's also on TradingView that has that. It's obviously if you go back into replay, obviously in FxReplay or the other just TradingView chart bar replay, it shows you the candle what it's already done, which is obviously not ideal because like it's telling you what price it's doing, so you don't really have to analyze it much. Which I've just actually realized if I actually put this to 1 o'clock, because obviously the 4 hour candles start at 6 till 10, so you only want to look at the candle from when is it to it'd be from what would it be midnight, no, it'd be 10 o'clock to 2 o'clock, but that's the only 4 hour candle you want to watch because you wouldn't be able to see the 6 to 8 one. Not 6 to 8, 6 to 10, sorry, because you trade from 8 to, well, I trade from 11, so if I didn't get a trade by 10, then yeah, obviously I could use it, but yeah, I've tried this, put it at 2, so it put me at 7, so I can see the hourly candle before, obviously, London happens, so you can analyse it from there, and now thinking about it, I could literally put it to 1, so I'll get the 4 hour involved as well, but yeah, as you can see, we're in this daily range. So from this low to that high, obviously we're bullish because the last break was here. If this forms a low and the next candle down, then would obviously be bearish, and we'd be in a new range from this to wherever it stops. So yeah, daily 4 hour. Obviously we know we're in equilibrium, so we're all good to go on the buys as long as the other time frames are matching up. And obviously I traded 6 to well, it'd be 6 to here. So ignoring this candle, ignoring this one, sorry, because as you can see, the trade I took at London is covered from this. So as you can see, bullish, bullish. That one doesn't matter because we broke above these two highs. Realistically, it only matters about that one. Then obviously we broke again, which is extra confluence. And obviously we're in this daily range, this fair value gap, this supply, order block, whatever you want to call it. So yeah, hourly time frame. Obviously, don't look at the 8 o'clock candle because I wasn't able to see that as I put myself at this candle and put myself here. As you can see, break a structure to the upside. Simple. So we've got daily, 4 hour and 1 hour in line. Realistically, if daily's bearish, or in this case, daily's bullish, but the 4 hour and the 1 hour are bearish, you can expect a daily retracement. So you'd want to look for sells, and that is the main thing that I messed up on. Is when I used to trade this, I'd want everything to be in line like it is now, but I wouldn't adapt to price. So now obviously I've seen daily 4 hour and 1 hour was in line perfect, but if I saw daily was bullish, 4 hour and 1 hour were bearish, then I'd wait for them to be in line, and that's stupid. You need to adapt to price. If you know daily's bullish and it's not in equilibrium yet, you know it's going to be retracing until it reaches equilibrium, and then it can go higher or lower depending on if it breaks structure to the downside or upside. Obviously this all comes with market experience, and that is just gained through screen time. So as we know, 1 hour, 4 hour dailies in line, this is literally a perfect setup. So what was we looking at coming into this session? As you can see, we are London here. London straight away sweeps this sell side liquidity, and I'm like, cool, let me have a look on the 5 minute, because the way I do things is the 5 minute equilibrium is the key, because you could literally have any POI and get a 1 minute candle out, but there's no extra confluence with the 5 minute equilibrium. So this literally is the key. So obviously we sweep liquidity, and I could have entered on a 1 minute breaker structure there, and obviously it would have worked. But if it wanted to go back down, then you're getting stopped out for no reason. So yeah, obviously sweep this. We're now waiting for a high to be put in, so we can have this low to this high. Now we've got an equilibrium. Now price needs to come into equilibrium before going up or down, depending on what your bias is. So as we know, we've got a 5 minute fair value gap. Now if we've got a 5 minute fair value gap, we really don't need to be going down to these smaller time frames and looking at all these individual fair value gaps, because it's just not needed. Like if you actually look on the 1 minute, there's no fair value gap in this gap. However, on the 5 minute there is. But if there is a fair value gap on the 5 minute, just use it. Why do you need to have a 1 minute one? You don't. I'll answer it for you. You don't. Same with if there's none on the 5 minute, go to the 3 minute. And as we can see, it actually tapped the 3 minute one perfectly, but we had the 5 minute. So let's not even adjust, because that's how I just saw it. There's no point doing all that. So yeah, so we've got a 5 minute fair value gap. Now what does that mean? We've got a 5 minute POI. We want the same time frame displacement candle out. We can't have a POI like this, 5 minute, and enter on a 1 minute displacement candle, because it's not the same time frame. But yeah, cool. So I'm back now. Literally just had to answer a quick phone call from my guy. But yeah, as you just heard, you can't enter on a 1 minute displacement if it's a 5 minute POI like this fair value gap, because that's not how it works. Like if you're using a 5 minute fair value gap, you want a 5 minute candle out, because you can easily get a 1 minute candle out and then it breaks structure down and stops you out, just because, yeah, you're not using the right time frame. But yeah, as we can see, we obviously set equilibrium here. We come all the way down and we tap in, the space out. And what do you think we did, guys? We entered. And now this stop loss placement is literally perfect because one, this fair value gap, cool. Two, we also have this order block right here, which we could probably refine. No, we can't refine that. We can refine it in here in our range. So this is also covering basically half of this order block and the fair value gap. So it's literally overlaying it, overlaying it. But yeah, no, literally, that's all we needed. We need a 5-minute candle out, cool, stop loss here. As you can see, price almost tapped our 1R. So if this is your first video watching, I go break even at 1R and then take full profit at 2R. So as you can see, almost came and tapped us. However, it didn't. Came back to the same fair value gap that we used for the entry. Come back up. We went break even right there. Got very close to break even. Literally, we entered at 24. This wick was at 31. So literally like 8 pips. 0.08 pips from break even. And then it ran away. Smashed TP2. Which is literally nice and precise. So let's have a look, see what price does after. Smashing this. As you can see, if your broker didn't tap you out there, then it definitely would have tapped you out with these ones. Obviously this is just in hindsight now. But yeah, that is the trade. I could show you this one as well. The only thing about this is how when you go to break even, it does actually remove it, so you can't actually see it on the chart. However, this was a short position, I believe, and I believe our stops were at this high, maybe. Have a look. I think it was a 3 minute. Let me have a look. Okay, that's the trade we just took. Let me click on this one. So we entered at initial stop loss. Cool. Can put in these numbers then. So entered 291, initial stop loss 395. And then we would have had a 209. About that, 208. Yeah. So, cool. As you can see, this was, I don't even want to go over this trade because this was sort of against, it was a daily bullish, hourly bullish, 4-hour bearish, and I was just testing out if you can go against the 4 hour. Obviously it holds high power to the 1 hour. Evidently you can if you took full. So obviously, as you can see, price come down, run up a bit, almost hit stop, come back down. So I literally took 50% off at TP1, obviously break even, as that's what I would do in a live trade, because if it's been chopping, then you just want to take partials and get break even ASAP really. So you might as well take partials for the stress that you've been in, with it being, what's it, 87, so literally like 0.09 pips away from stop. So a spread you might have got stopped, but yeah, you would just want to take, you could even take 75 off And then this loss was literally news, which I know I shouldn't have entered in. It was me just getting on backtesting. This is the positive of backtesting. You can test different things. Obviously, you know what works and what doesn't, because when you produce results like this, which you've been collecting data for, which is literally perfect examples like this, then of course you know what you're doing. But I was going to make this video a 2-video thing, going over some Ethereum forward tests that I've been collecting. However, this video is about 15 minutes long, and don't really want to make it that long, so I'll just make a separate video. But yeah, hopefully you guys learned something, hopefully you enjoyed, and I'll see you guys for the next video that might get posted the same day. It probably will, because my work rate's been quite good recently. But yeah, see you guys in a bit.